The landscape of the data center business has been changing rapidly since the arrival of ChatGPT back in 2022, which kicked off huge demand for IT infrastructure that can support AI hardware. This data center boom has transformed how data centers are designed and where they are located and powered. To understand these changes, I spoke with David Liggitt, the founder and CEO of datacenterHawk, which provides research and market analysis on data center real estate. David is one of the sector's sharpest analysts and has been tracking data center markets for about 20 years. With the in-depth market data compiled by datacenterHawk, David has a unique vantage point for how AI is changing data centers and what it may mean for our digital future. In our discussion, David shares his perspective on utility power constraints in major data center markets and the ongoing supersizing of data center buildings and campuses, and how that has altered many of the traditional approaches to data center site selection. We also examine the influx of capital and new players in the data center market, whether there is a bubble developing, and why experience matters in delivering hyperscale campuses. David also offers a glimpse into what datacenterHawk's research suggests about which markets might emerge next as data center destinations. Some of them might surprise you. Here's our conversation. Welcome to Data Center Richness. I'm Rich Miller, and I've spent 25 years telling the story of data centers, cloud computing, and AI infrastructure. In this podcast, I'm sharing conversations with the innovators building our digital future. Now, here's our show. David Liggitt, welcome to Data Center Richness.
Thanks, Rich. It's great to be here. Great to see you, and very excited that you're pursuing this path of communication. It's going to be awesome.
Well, thanks so much. You and I have both been tracking the data center industry for a few years, but things have been different lately. We've kind of entered a new era of data center growth driven by AI workloads that really kind of kicked off with the arrival of ChatGPT and its growth in like late 2022. Since then, some things have been different, both in terms of volume and where data centers are located. So I thought a good starting point would be to get your take on what's changed since AI has become the new hotness.
Yeah, we've been at data center conferences for almost like decades now, where we've talked about the Internet of Things and 5G and all these different self-driving cars, all these different technologies and applications that could shift the data center industry dramatically. And really it's been AI. AI has been the one that has had the biggest impact on our business as a whole. You mentioned it, 2022 was really when we started to see, I would say the beginning portions of the growth that would take place. But, I'd say a couple things related to AI growth, how it's impacted the data center market. One is it's shifted the geography where data center locations or data center markets end users have traditionally built in these places. Those markets have shifted. So for years we tracked, there were 10 major markets in the US, and that has shifted dramatically over the last 2 years because a lot of the growth has been centered around the machine learning projects that can really go anywhere because they're less latency sensitive. So that's one thing that I would say. The second piece would be the size of these projects has changed dramatically. And 5-10 years ago, data center projects were 10 megawatts, 20 megawatts, 36 megawatts, 72 megawatts, 150-ish, and then it really shifted to seeing projects that were 300, 400, some up to even like a gigawatt or gigawatt and a half of power. So that had a big shift as well. And there's some other smaller ones, but those have been the really two largest changes in the way that the U.S. data center market has operated. And it's pushed demand into places historically that we haven't seen it, but it's also driven demand in the major markets as well. So the Dallases, the Phoenix, the Northern Virginias, the Chicagos, the Atlantas have certainly grown as well.
And with the sort of extraordinary volume, there's been a lot of interest in following the power, as you guys have talked about very much. How has that changed how people think about location?
Yeah, it's changed it in a number of ways. First would be, how quickly can the power be delivered? And those timelines have been extending now for the last 3 years. So we're not seeing areas in the U.S. where the power story is getting a lot better. It typically is getting a lot harder. And so that's a good thing. It means there's opportunities for those in the market, number one, that know what they're doing and can actually deliver. So it certainly creates an opportunity to differentiate yourself if you're a data center developer or a provider. But I think too, it's really shifted how people look at investing in certain areas and in certain sites, and so I think it's put more emphasis on number one, speed to market related to power perspective, but also alternative energy. I think those of us in the data center space that have been in this market for a while, have had to almost become energy experts as well, because there's now a path of interest in different energy sources, most of those off the grid that could potentially power data center projects. And so that's a whole new part of our industry that I would say 5, 7, 10 years ago was a lot less interesting, because the market dynamics, were quite a bit different. One story I tell quite often, related to the changes in the market. When I, previous to starting datacenterHawk now over 10 years ago, I was with CBRE for 8 years, and part of my work was doing site selection projects. And we always had a very long list of risk assessment that we would do on each site. And so one of the things that would always kick a site out, and you would never want to utilize it, would be its proximity to natural gas pipelines. Any proximity to that, you would want that site out of what you were looking at. Now that's a positive. People are looking for sites that are close to natural gas pipelines for alternative energy opportunities. So the market shifted quite a bit, and those are some of the things that are impacting how people are looking, at one site versus the other, or one market versus the other.
I wanted to ask about the natural gas in particular, because that seems to be a larger piece of the data center energy landscape now. And even I heard some discussions this week about thinking about natural gas basins as places that suddenly loom larger in the data center landscape. I mean, Pennsylvania is a state that I wouldn't have thought just a little while ago is getting attention, but now it is. Does that track with what you're seeing?
Yeah, I think if there's areas around the U.S. that are rich in natural gas, today those would be areas considered very interesting for data center development, given what different groups look at from a demand perspective. Now, I would say there's still a chasm to cross as it relates to end users really getting comfortable with this. In the top 10 to 15 end users, in the industry, we all know they have significant sustainability goals that are almost clashing with the challenge of using some of these alternative energy sources. Last year, I was at a conference talking to someone that focuses on financing alternative energy projects, and I just asked if you could solve this with one type of energy, what would it be? And very quickly, he said natural gas, and his comment was around, although the barrier for getting those users to embrace it still is challenging, it is the one energy source that we have enough of here in the U.S., and it is readily available. And I think that was an interesting moment for me. As I think about all the other types of alternative energy, I think they're all worthy of our evaluation, but some of them have different timelines, some of them have different community pushback, some of them have different financial implications. But I think you're right. I mean, natural gas is certainly a far more interesting discussion today than it was 3 years ago. And if areas of the country like Pennsylvania, you mentioned, and other places have an abundance of this, chances are you'll see data center developers kicking the tires on sites in those areas.
One of the things that's been interesting is that there have been so many announcements of gigawatt and multi-gigawatt. You guys had a great data point that there are now, I think 34 markets that have over 500 megawatts coming, and Just all of the announcements have given people some concerns, a little bit of anxiety about, well, is this a bubble? What's going on? I noticed that particularly after the PTC event is one of the big conferences in our industry, it seemed like after that, some of the discussions coming out of that were much more about who can really execute on all of these. You've talked about the importance of teams that can deliver in this environment. What do you make about where we're at and what the path forward is going to look like with all of these announcements, and at the same time, all of the traditional providers who are trying to get work done as well?
Yeah, I mean, the data center industry is a great market to be in. You know, I think we've known that for a long time, but I think with the demand growth that's taken place over the last several years, and I would say other commercial real estate asset classes maybe not performing as expected. You know, the data center space has kind of been the shining star of all these different places. So a lot of people have noticed what has been taking place in the data center industry. So when that happens, you know, you get a lot of interest from other investment groups and different developers that want to get into the space. So I think, you know, from our perspective, we're really excited that there's new people that are entering the space. I think, number one, we should all be excited from a labor perspective, because that's one of the biggest challenges our industry is going to have moving forward. But two, you know, it's important to do due diligence on some of these projects to make sure that, you know, they actually have agreements with power providers where they actually can perform. To your point, Rich, on you know, can they execute? I mean, that's the question that data center users are asking, and they're doing. You know, if you won't be able to fake out a large data center user. You know, they do this themselves. And so they're going to ask a series of questions pretty quickly to understand if these site developments are you know, real or not. And, you know, when there's one person behind a 4 gigawatt development, you know, I think people will scratch their heads and go, how realistic is an opportunity like this? So what I would say too is that's not to discourage those that want to get in the space, but I just think, you know, we're talking about billions to hundreds of billions of dollars of investment that's coming over the next, you know, year, you know, let alone 5 to 10 years. And so I would just encourage anyone that's getting into the space and putting developments together that's never done it before. Credibility, capital, creativity, like those three things you have to have them in order to get these deals done.
It seems like you mentioned the things that are sort of requirements. You know, capital, having a team, having power, and in some cases having customers who you have that credibility with. And obviously some of the people who've been doing this for a lot of years have all of that. It seems to me that a lot of the new players are backed by folks who have lots of capital and plenty of experience. Maybe they've got the right land. I'm wondering if there isn't a little bit of a consolidation going forward, as maybe if the folks who may not have all of those things lined up, but might have a site with potential,
sure,
will wind up becoming, you know, candidates to work with someone else to get it to the finish line.
Yeah, absolutely. That's a great point. I mean, there's going to be clear winners in this space. There's going to be some losers. That's how these kind of industry significant growth time periods go. I don't think, you know, I think there's opportunities to put together JVs with, you know, different groups that, to your point, might not have all the things that they need, but have enough to become a partner with some of these larger data center operators or developers, or even end users themselves. I think you just have to be open and, you know, realize, just take a good, like we talk a lot at our company about humility, and, you know, our view of that is just being open and honest about what your strengths are and what your weaknesses are. And so, you know, I think with the development side of things, you really have to understand, hey, what are our strengths? You know, what do we do well, and what do we not do well? And then how to position yourself, Rich, to your point, with groups that might be able to fill those voids so that you can partner or you know, there is going to be some M&A that allows these groups to succeed. And I think that's a really important part of our business today.
It used to be back in the day where it felt like there was a pretty high barrier to entry to the data center industry, both because what felt like a lot of capital at that time was needed to get a lot of these projects going, and because it wasn't just real estate, there's this technology piece, having the right team in place. It was like not just anybody could come in and do it. But and that's still true to a certain extent, but it also seems like there have been some new players coming in that have been able to make a pretty big impact quickly, partly because of the shifting tides in the energy space. What's been your experience on that, and do you think that's something that will continue?
I do think it's something that will continue. I think the key there is picking your partners well. The data center industry has certainly expanded over the last 3 to 4 years, but you know as well as I do, it's a small space. Most people know each other. And so, typically when we're evaluating these management groups of development projects, we're wanting to understand, who's behind the project, what is their experience and what have they done? And that's a big part of it. And so I think partnering with groups that have been there before, have done the work, have executed, that's one of the things I think the end user groups are looking at more than anything today is like, how are you going to deliver this project, on time and on budget? And that question has never been harder to answer than it is today in our space. And that's not a shot at anyone. That's just the market conditions have changed. It's gotten so much harder to really understand what you have when you have a PPA sign from a power provider that says they're going to give you 200 megawatts by this date. The question is that really going to happen? And they could have their best efforts to do that, but the reality is there might be changes that take place that don't allow them to perform like they said they would. And so I think a lot of it is making sure you are partnering with the right groups. And I think if you look back over the last 3 years, Rich, to your point, the groups that have come in and made the biggest impact, I think they've understood that both, I think, the macro and the micro trends that are happening in our space, but I think they've picked partners that have allowed them to move fast and really develop with credibility. And I think those two things have made a big difference.
With this sort of expansion of new players, new technologies, new energy sources, I don't know about you, but this has always been an industry where you learn something new every day, just about. And some days, simply to keep up, you got to learn about a lot of new things. And so I'm wondering, you mentioned datacenterHawk. You guys are 10 years in. You focus on helping data center professionals make better decisions. What does the decision-making landscape look like now? How has that itself changed, and how have you and the datacenterHawk team tried to adjust to what you do to meet the needs in the market?
Yeah, I think any data center investor, provider, end user, consult. Any group that's going to go out and spend $100 million plus, $1 billion, $5 billion, $10 billion, they're going to do that, or they should do that with great data. And we have found as the cost to make these decisions grows, the importance of having really great data to help support your decision making is a really valuable tool. And so I think what we've seen is that the data points have changed over time. It's certainly more about understanding how much power certain regions can accommodate over a period of time. It's understanding all the components that it takes from a supply, demand, pricing standpoint to make a decision where you want to grow. Sometimes we talk about it's not necessarily where everyone is, it's where everyone isn't. And so just understanding the landscape and to your point, Rich, how quickly the market is changing. Like it's changing so faster than we've ever seen. So I think with all that, what we found is that the one common thread there is that people need data to make great decisions. And we've really tried to design a platform that helps people do it quickly, build that framework quickly so that you can feel comfortable about, going and spending $1 billion, $3 billion, $5 billion. These projects are so capital intensive. If people are listening, the project size is just massive. When you hear a company going out and raising $1 billion, thoughts, man, that's so much money. In the data center world, that's like one project.
Right. That's
one development project, essentially, that they can go and do before they've got to go back and say, we need another billion, or 5 billion more, or 10 billion more. So I think that what we've had to do over time is just change the approach, change the menu of data that's out there for our customers, and then really recognize, this is a global business now. We talk in the U.S., when we talk data center markets, Rich and I were writing data center reports 10 years ago in Dallas and Chicago and Phoenix together. Yeah. And now we're still doing it, obviously here in the U.S., but it's London, it's Frankfurt, it's Singapore, it's Sydney, it's, Brazil, Spain. I mean, it's a global business. And so I think that's been a part of our push too, is having team members in markets around the world, boots on the ground, to help our customers really understand what's happening.
Along those lines, you guys having the sort of data-focused approach, one of the things about looking at the data is that it can give you some early clues about where things are headed. Everyone's always interested in what the hot geographic markets are. You've mentioned you've got the global perspective now. What's the data telling you in terms of what some of the interesting markets might be, first in North America and then maybe globally?
Yeah, I think as I'd say the interesting markets in the U.S. are ones that have power and have it in 2025 and 2026. But like more broadly speaking, the major markets still receive a significant amount of growth. So I think that one trend we have seen is new submarkets appearing in larger major markets. And that is for a number of reasons. A term that I think the industry is talking about, or should be talking about more, is site fungibility. Can a site be used for both, AI or cloud deployments? And so, the end users that are buying land to either mature a cloud portfolio or, put inference sites on the ground, that site fungibility term and principle, I think, is being looked at in major markets across the U.S. So I think, we will see continued growth there. Somebody told me the other day, and it's not just because I live in Dallas, but somebody told me on the phone the other day that Dallas is the most interesting market right now, and we're seeing, more people look at this market. But if you look at like Northern Virginia, I always say it's almost like it's becoming middle Virginia because it's moving down the 95 corridor. And so that's a really interesting thing to watch. 7 or 8 years ago, what we were talking about in the industry was really Ashburn and Manassas and the distance there. And is Manassas too far? And, now we've gone 4 or 5 times down, as far from as that distance is south. If you look at like Frederick, Maryland, where there's a project there right now, that's a really interesting development. And that's an example of like a sub-market in a larger market. So I think that's an interesting trend to watch. And I think you'll see that really globally, especially as I think data center operators wrestle with, and investors and even the cloud service providers, how deep into the language learning model game do we want to go? And how far out into these markets do we want to go? And how of these facilities that we build, how many, chip refreshes can we get in the facility before the facility design is out of date? And so I think there's a lot of things like that they're wrestling with, trying to figure it out.
Yeah, I'm having to learn all new county names in Virginia, just about you get going all the way down to the border with North Carolina. It seems that everybody's looking for opportunity there. But I think that's been part of the state level strategy, particularly with some of the deals they've signed, is to spread it out a little bit and see if other parts of the state can see some of the benefits that particularly Loudoun County has. Yeah,
and I think one of the challenges, as we move into these secondary markets and some of these big projects get done in cities that we never thought would be data center markets.
Right.
The challenge, I think, with a lot of those areas is really like project 2, 3, and 4, because the initial projects coming in are so large. So if a 2 gigawatt project goes into a rural area in Mississippi or Louisiana or Arkansas, or somewhere that traditionally has not had data center development, then the question is, okay, well, what's left for project 2 or project 3 or project 4 that comes in? And so I think that will be an interesting thing to watch, is how mature can some of these secondary or tertiary markets get, only because a lot of times that first projects can take the infrastructure that is there from a power perspective, or even like a water perspective. That's an interesting thing to watch too in some of these areas is the impact that the data center growth has, not just on power, but on other community things, and how much more data center developments will these secondary or tertiary markets really want? That'll be an interesting thing to watch.
Yeah, because communities are noticing, and they know to ask about this up front now.
Yes. Yeah, they've gotten smarter, and they've gotten more, is my opinion, but I think they've gotten more organized on how they might push back against data center projects. And so, data center, the end users and the data center developers are doing a much better job, my opinion, on interacting with the community and trying to think through where they go and the impacts that might have and what they can do to help the community in that process. But it's kind of a back and forth, and I think we'll see that continually in the U.S., especially as the projects get larger.
Yeah, I think so, because when you see some of the numbers, people are like, well, what does that mean? What does a gigawatt look like in our community? And do I want to live next to it? Those are real questions. I wanted to close with a question that I think is on a lot of folks' minds, which is right now, and for a while, it seems like there's been sort of an imbalance between the supply available and the demand from folks who want AI. Is that imbalance going to change, or are we going to be almost fully pre-leased to the horizon here? What's your take about what the next few years look like? You got to be careful with crystal balls, but...
Sure. You bet. I'm sure we'll look back at this in 2 years and go, David was completely wrong. But, I think through 2027, we're in this environment. It's really hard to change, anything within a 2-3 year window, just given a number of kind of both the macro and micro characteristics in these different markets. So I think that's how I see the next few years. Beyond that, it really depends on how many groups are willing to, I would say first pay the new amount of money needed to do the power studies, and then pay the money that it's going to take to actually fund the power to get the site up and going. So it's one thing to be buying a site and trying to flip it for data center development. It's another thing to be doing a power study. It's another thing when they say, okay, we need $40 million for a new substation. And that list of people that are interested goes from here to here, because they don't want to put up that $40 million or might not have the capital to do that. So I think the good news about the data center space is that if this was the office market, it would be oversupplied in a year and a half, and it would totally change. The capital is so intensive on one of these projects. We mentioned it earlier, $1 billion for one project, that it's really hard for groups to get ahead of themselves. Now, I say that, the industry has been ahead of themselves before, but not significantly. I would tell you that at least in my almost 20 years of doing this, there's not times that I can remember, someone having a 36 megawatt site sitting there available to be leased. People don't release the capital that way. They do it in, tranches and different phases. And so, I think if everybody could keep their heads screwed on straight, the market's still going to be in a really good position over the next 3 or 5 years, even in the midst of some of the user, I would say, readjustments with their demand. There's some changes happening, and I think those changes are good. It's maturing the market. It's creating opportunities for other users. So long answer to a short question, but that's really what I think. I think over the next 2 or 3 years, we're in this market, and then after that, we might see a softer market. It might lean back towards the end user, but it's going to be a while.
Well, I ask a lot of short questions, but the data center market these days is not easy to break down to a snippet. I always appreciate the data and market studies that you guys do. If folks are interested in learning more about datacenterHawk, where can they go?
Yeah, datacenterHawk.com is our site. We're a subscription-based platform for data center investors, providers, end users, consultants, vendors. So you can jump on there. Our team is very responsive. We also do a lot of YouTube podcasts and things like that. So I think you can find us probably on any of those platforms. But Rich, as always, appreciate the opportunity. Very excited about, I think it's data center Richness. I think that's what you're calling
Richness, that is.
I love it. Well, anyway, we're big supporters and excited about your days ahead.
Well, David, thank you very much for your time, and thank you to all of our listeners. We appreciate you and your interest in data centers. Stay tuned, and we'll be bringing you more good stuff on the data center richness.